Thanks for joining us. I'm Marlon Bowling with you. Happy Monday to you, and appreciate you being on board with us and allowing us to be a part of your day. Joining us right now in this segment, we have Rich Nelson of Allendale Incorporated in McHenry, Illinois, as we get things set up here for the last full trading week of March of 2018 already. Rich, I wanted to point out off the top, just a side note, it's now officially 9 months to Christmas. You're welcome. All right, now let's take a look at our grain trade from overnight. Didn't see a whole lot going on, and looking at the corn market, first of all, we had the corn just about as quiet as could be. We had the May contract a 1/4 cent higher at 378.5. We have December up a 1/2 cent. On the soybean trade, we flip over there, and we currently have the May contract about 2 1/4 higher at 906. And November is up 1 3/4 at 939 1/4, so that's about as exciting as things got overnight. If you look at the wheat market activity, we had Chicago's May contract 3/4 higher. It was at 466 3/4 in July, up a penny. In Kansas City's wheat market, we had the May contract down 3/4 at 444 1/4. In July, down 3/4 at 452 3/4. Minneapolis wheat on the spring wheat market, which is going to get more and more attention as farmers try to get in the fields. The May contract down a penny at 571 1/4. In July, down a penny and a half at 569 1/4. I don't know if I can keep you from it, but can we talk about anything affecting the grain markets other than China here today?
You know, I think we can discuss something a little bit at least. This current moisture situation is still getting a lot of discussion here in the trade. According to the U.S. Geologic Survey, we have 155 stream flows currently reporting water levels over flood stage. So I think that's one issue still being discussed, and that, of course, doesn't impact grain that's in storage underwater in some locations. But on the other hand, it also does impact some demand centers, specifically ethanol production here.
Is there any way to determine how much grain was actually lost due to the flooding? Like you say, there was a lot of private and even some commercial storage where the grain bins ended up sitting in water, and that pretty much ruins that bottom layer of that bin, makes it almost impossible to even get it out of the bin.
Certainly right, and that's something which we just can't quantify at this point. And also, on the other hand, the loss in demand, while we will get some ethanol production numbers here, we can probably argue that it might be a little delayed here when we finally get them. So matching up how much we lost versus how much demand was hit, certainly a tough question right now.
Every year at the end of March, USDA comes out with a prospective plantings report, and this year is no different. It comes out Friday. Also, we will get our quarterly stocks report. On the prospective plantings report, can you even go much by the numbers that are revealed in that? Because of all the massive flooding across the Midwest, there has got to be some shifting of acres, one would think.
Very valid point. And this is a survey taken roughly as of March 1. So this will be what they intend to plant, given good planting scenarios in front of them. And we noticed that, of course, from our research on other years with similar moisture at this time of year, that in 6 of those 8 years, we actually saw lower corn acre numbers. And surprisingly also, in 4 of those 8 years, we saw soybean acres decline from the March estimate. So a lot of questions about what actually will get done this year.
Okay, Rich, we'll come back here in just a moment after a word from our sponsors, and we'll analyze the latest cattle on feed numbers and the cold storage numbers that both came out Friday after the markets closed. They were current numbers, and we'll break them out for you right after this. We are talking with Rich Nelson of Allendale Incorporated in McHenry, Illinois, and shifting gears and looking at the livestock side. There was a lot of anticipation about once the markets closed up Friday afternoon with the livestock trade. Then we got USDA's highly anticipated current, I'll put that in air quotes, current cattle on feed report and the current cold storage report. Finally, there's no delayed data for the first time since 2018. And here's a look at the numbers. Now, there was a bit of a surprise here on the cattle on feed report that came out. Traders were looking for an on-feed number of 99.7% of a year ago. It came in at 101, so a little bit higher than expected. The one that raised all the eyebrows was the placements number. The analysts expected a 4% decrease from a year ago. In other words, 96%, but it came in at 102%, or a 2% increase in placements into the feedlots. Now, this is as of the first of the month. Now, the marketings came in at 100%. That was a little bit under the average trade guess of 100.8. So on the cattle on feed report, what do you take away from that in itself here, Rich?
You know, it actually does seem reasonable when you look at the big picture for placements these past few months. September through January was down about almost 5% or so. And we have a larger calf crop from 2018. So at some point, we will have to flip these numbers, and looks like that may have started here. Maybe we'll see some numbers, probably especially in the April timeframe, add in a little bit here. So definitely changing a little bit of narrative and adding some more numbers for this late fall and Q4 period here.
Then we had the cold storage numbers that came out, and as we take a look at the frozen red meat and the beef and the pork supplies, on the total red meat supplies, it was up 2% from the end of January, up 2% from a year ago. The beef supplies down 6% from the previous month, up 4% from a year ago. Frozen pork up 9% from the month before and up 1% from 2018. What do you take from that?
You know, overall numbers as far as the beef side, this was relatively within a 5-year average change. Maybe on the pork end, from the end of January to the end of February, we had a 53 million pound increase, quite a bit over the 5-year average increase of 40.6. So definitely a little larger numbers on there, adding maybe a small amount of pressure on hogs here.
Meanwhile, we had numbers on poultry supplies as well for frozen poultry, chicken, and turkey, and they were all higher than the month before. Overall, poultry supplies were up 7% from the month before. Is that going to be burdensome for competing meats against the beef and the pork?
It is an issue, especially as we're looking at wholesale chicken prices, which are roughly 15 to 25% under last year. So this does add a little pressure for us on the pork end, especially.
Well, we'll see how much impact it does have when the markets open up in about 5.5 minutes from right now. So, Rich, always good to talk with you. Thank you, sir. I appreciate it, and we'll talk with you again soon. Rich Nelson of Allendale Incorporated. He's based in McHenry, Illinois.